Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Hope everyone's doing well. Time to caffeinate and dominate. We are taking a look at a couple key symbols here to kick off the morning. First up is crude oil, the moving crude. One of the questions that I got over the weekend focused around: is this tradable? Where can we trade it? And then is this a problem? So it's kind of a dual conversation here. And frankly, as long as price action does not accelerate through those April highs, this should not be a reason for too much concern. But in the meantime, it has crude oil futures. This is the September contract, by the way, the CLU. It has organized into an uptrend. It's north of the 200 propulsion, and it is absolutely ready for buy the dips. Now, a couple different ways we can buy the dips. Many of you have noted, hey, Rog, we know that you focus on the buy the dip at the mean reversion that would be considered the wave. Let me grab my drawing tools here and show you. All right, here we go. So this is the mean reversion that I do focus on way down here, right? This is the 34 EMA wave. And then slicing in here, you can see the 200 propulsion. We are above that. We're north of the equator, if you will. Now, am I expecting a pullback to this area? Actually, I'm not. Let me show you what we've been relying on in many of these either accelerated uptrends in terms of getting above the 200, organizing it into an uptrend, but not really pulling back to a mean reversion. And again, for me, that's the zone between the 34 EMA high and low. It's the daily price movement range. And if you take a look at the way in which, even in the chop, right, you don't need to wait for a trend for the daily price movement range. In fact, this is going to work just as well in chop as it will in an overall uptrend, which is really what we're dealing with increasingly more. We just have to remember, focus on the directional bias in the chop. So we still need to pick a side, right? I think a lot of trading is this pursuit of sort of being neutral and not needing to pick a direction. Gang, the way we make money as traders, even if we're taking a neutral option strategy, non-direction is still a direction, right? So let's remember, there's no way to trade without some reliance on either picking a direction or saying a market is not going to pick a direction. Even that is a direction, right? So as long as we're going to be focusing on that, that's the zone right there. That's the daily price movement range. By the way, this is as good a time as any for me to remind everybody, if you have not already, all right, make sure that you're signed up for the Wednesday. This is coming up day after tomorrow, the Wednesday, August 2nd, 8 p.m. Eastern webinar, simplertrading.com/opportunity. Little sneak peek into what we'll be offering on that day. We will be offering a complete Sector Secrets Mastery Trial Package. And one thing we've never done before, and this is super limited, gang. I put the dates up here so no one has any confusion as to this window of the trial package. HPMRs and yes, those DPMRs are going to be available. So if you're looking for zones like this, you can try them out for a month, for 30 days. All right, so that's something we're definitely looking at. And then relatedly, energy. So as long as crude is in an uptrend, there's a certain amount of optimism with demand in commodities. But that optimism, especially in crude, can turn into a cause for concern. Let's keep an eye on those April highs. So that's one of the things that I've got on my mind. Of course, this week, gang, we have, as always, oh, by the way, yeah, the Trish boss is reminding me that the trial actually sign up is available until August 7th, right? So if you want to sign up for that trial, it's until August 7th. Yeah, so I want to make sure I remind everybody. The trial window is August 3 to September 1, and you can sign up until August 7. After August 7, that is the cutoff. So put it on your calendar, mark it down, and back to XLE. All right, so I do like potential dip buys in XLE because if crude's moving higher, energy stocks are moving higher. Keep an eye on the relative outperformers. If you haven't checked them out yet, and if you're a member of the Sector Secrets Mastery, we have just published this week's issue of top tier outlook. You can find it in the dashboard. And that comes, by the way, that comes along with the mastery. All right. First question for the morning comes from Jay, who asks, does Friday qualify as a minor low on the ZB? So the ZB is the 30-year. Does Friday qualify as a minor low? And the answer is yes. Right. So we have the lower low. By the way, a lower low really close to the previous lower low. Take a look at the automated Darvis. Take a look at the signal, that green arrow. Yeah. So Jay, if you got Darvis 3.0, yes, that is a minor low. You bet. And we'll be looking to see if we can take out 124.21 for follow through to the upside, which probably is as important as ever for bonds to reflect the pause to cut scenario that is loosely being baked into the cake, but still most probable for the remainder of 2023 into Q1 of 2024 with a late Q1 or late Q1 or early Q2. I think we're somewhere between March and May on the rate cut as reflected by the target rate probabilities. All right, so next up, Nick asked, what do I notice about the Euro US? I'm bearish on the Euro US. Okay, so let's bring that up. And here we go, Euro US. And if I take a look at the Euro US, this is the 1 year look, and you're bearish right now. I'm not bearish, Nick. I think it depends on the time frame. So not knowing what time frame you're looking at, I'm not bearish on Euro US. I know dollars had quite a move as of late. That is true, but I'm not bearish Euro US, and for a few reasons. So number one, the European Central Bank is still very much in their rate hiking cycle while the US is winding down the rate hiking cycle here. So you just have the contrast between a hiking hawkish, right? Hawkish ECB. I won't say quite yet a dovish FOMC, but definitely heading in that direction. That should keep the Euro US, generally speaking, moving higher. It's above the 200. While the dips have been definitely a little bit more, well, dippier, revisiting the 200 propulsion on the daily Euro US. Now, this looks different than the 6E, but directionally they're the same. If you're looking for specifically a Euro US setup, I would say if you want to be a little bit more patient, wait for the Darvis support. That's the automated support and resistance, or wait for the 200. That's what I would look at. So if you want to be bearish on the route down to that level, that's fine. But remember, as we get different macroeconomically important data in the US, which moves yields and dollar and expectation for what the Federal Reserve is going to do, it's going to move this chart as well, Nick. Okay. So thanks for the question. Next up, Alex, if you're day trading the indices using micros, should you chart the micro contract or the minis? Does it matter? Okay, so here's to say the MES, right? Let's look at the, and you're mentioning day trading here. So let's open up the 5-minute time frame. All right. So I'm day trading MES. It's trading at 46.15 3/4. If I jump over to ES, take a peek. 46.15 3/4. I mean, they're going to roughly be, I would say, Alex, all right, this is what I have found with the micros, okay? Micros are moving because of the ES. So think about sort of the chain, if you will, from top to bottom. Is the micro dictating what the ES is doing, or is ES dictating what micros are doing, right? We know the mini is more influential than the micro. So watch the mini. You're going to notice that it's going to lead by just a bit. Lead meaning minis are going to change, tick up, tick down, and then micros very quickly are going to change too. But they're typically going to be about 1/4 to a 1/2 point within each other. But the minis are more important because the minis are where the attention is. Depending on volatility, that micro lag can be even more. But on average, in normal price action movement, you're going to see about 1/4 to a 1/2 point. So you might say, should I look at micros if I'm trading micros? No, I would actually recommend looking at minis. if you are trading micros. And does it matter? Yes, because of that odd laggy nature of the micros reaction to what the mini is doing. So MES is going to have a laggy reaction because it's watching ES, almost like a little brother and a big brother, right? The little brother's watching the big brother. Same idea, same idea. On back to the conversation about currencies. Is it time to get UUP puts? Let's take a look. So UUP is an alternative to the DX futures or the DXY, and this is the ETF that represents the US dollar basket. All right, so if I'm looking at the US dollar basket here, and there we go, there's UUP. Do I want UUP puts? Yes, I am looking for UUP puts, preferably if we can get up into, that would be great. By the way I would prefer to set up UUP, Lever, is to look at the 6E. So I would prefer to look at Euro US Forex or the 6E Euro FX currency futures to set up my DX. And the reason for that is DX is a lot of currencies. It's mostly Euro, followed by Yen, followed by Pound. All right, so you've got really Euro 58%. So high concentration weighting, something that everyone, a phrase everyone here in Charts and Coffee should be well acquainted with. Whether you watch my free videos or whatever, you know that high concentration weighting affects pretty much everything we look at in trading. Currencies are no exception. So when Euro is not dealing with an FOMC or ECB event, this crazy candle here, gang, was the ECB. So we know we're going to be outside of the typical historical volatility moves. By the way, these are the daily price movement ranges on the daily chart of 6E. All right. So the idea here is that if you're focused on that daily price movement range for the buy, don't do it on an FOMC or ECB day. But notice how the last time we touched this level. So let me show you here. Moving down, no doubt, we have been seeing a pullback, right? Now, we've been bouncing between both levels, which means that we're having brief opportunities to get into the gray and go to the green. But notice the overall action's been lower lows and lower highs. And that's culminated into, you can see right here, at neutral environment. I still want to focus on the buy side, but for now, I would say, and we've been avoiding Euro and we've been avoiding dollar in the mastery room for a really big reason. If we have uncertainty about what the ECB and even the FOMC are going to do, we're going to have uncertainty about follow through here. We've been avoiding gold, bonds, and Euro for about the last 4 to 8 weeks. I'm trying to remember precisely when we said we don't have an edge any longer, but through July, for sure, we haven't touched this thing. So, Lever, I'm going to tell you, rather than tell you what to do, I'm going to tell you what I'm doing, right? I have not been touching this. So I'm a little concerned still about what's happening with Euro and dollar and even bonds and gold. So I've been trading around this narrative because I think there are clearer narratives in the broader markets, right? Do I have to trade currencies and yields? I don't. And really, I've been avoiding them for the most part. So sometimes a do not watch list is a really important thing to keep in mind. All right. Okay. So next up is, and Robert, this would apply to your question as well. You know, ZB, 6E, and GC, they're going to ideally move together. They're going to be a positively correlated group. So additionally, when ZB, long bond, GC, gold futures, and 6E, euro futures are not moving together, there is uncertainty about what's impacting this bigger picture monetary policy message, right? And that's reason enough. And when you have three symbols that kind of have to confirm each other, it's a really easy way to keep things off your watch list until that clarity comes back. So that would be the same thing. I want to see TLT and ZB move higher. Would it have to be after September? Robert, I really don't know. If we're going to set the tone for August, which is a notoriously tricky month because it's probably one of the months that we have the most vacation. August is sort of there's a lot of apathy in August. The last 2 weeks of August, if folks are going to try to take a vacation for summer, this is going to be it. So it's a tricky month. By the way, the last 2 years have not been bearish. So don't let anyone tell you. I hope once and for all, one of the stupidest things I've heard repeated in trading is sell in May and go away. And all I got to say is, how's that working out? Right. So I hope everyone here realizes to go on a seasonal and to say, oh, the end of July is seasonally bullish. That's just stupid. Right. And I know, Raghee, you're punchy, too much caffeine this morning. Maybe, but I hate when traders lose money, sort of compartmentalizing trading into, well, today's a bullish day and tomorrow's a bearish day, or this is a bullish month and this is a bearish month. It is what the market structure says it is. And right now, we're really, really bullish. However, Robert, I don't have that clarity in gold bonds or the euro, right? So please, please, please. One of the things that concerns me is that August could give us a little bit of a pullback. So please don't buy at higher highs thinking you've missed the uptrend. Wait for those shallow little pullbacks. But Robert, here's where, even though I'm talking about the indices and I'm talking about the things that are moving higher, I don't have this advantage here. But if you want a specific level, how about close to the gray zone, which happens to also be close to the previous low we saw back earlier this month in July, the July 10 low. Notice how we have the nice automated Darvis there. And that automated Darvis is overlapping with a DPMR. So that's pretty cool. But Robert, I guess it's really a matter of, is this the best place I can find a trend, or are there other places? I hope that ultimately is something that everyone's thinking about before they put a trade on. Is this the best example of relative outperformance? Is this the best example of an uptrend or a downtrend or an oversold or overbought market? So it's always a compare and contrast process when we're trading, right? Not picking a symbol, but letting that symbol sort of rise to the top in terms of its characteristics, right? Why it would qualify to get any of our attention and our capital. Thanks for the question, Robert. All right, can we look at V on the daily? There you go, editor. By far, if we're going to stick with that topic of, what's a relative outperformer, I would not say V is one of them. Take a look here. This is a layout that we use in the mastery. And yes, when you join us, you will get a layout that will allow you to build these what I call multi-charts. It's a flexible grid in Thinkorswim with specific indicators on it to make for really simple instant scanning. What do I want to avoid? V's one of them, editor. SPGI, which frankly, I don't trade that much anyways, and Citi. Almost everything else is a relative outperformer. And then we start to focus on which one of them amongst the uptrends are heavily weighted and have the best structure and zones for a buy the dip. Yeah. All right. Great question, Stu. Stu asks, I do not have a Thinkorswim, a TOS account. Will the month trial work for me if I'm with Fidelity? So Stu, what I recommend for traders who don't use TOS, which is perfectly fine, one of the things that I like to focus on is having redundancy, right? And that means if TOS isn't cooperating, I've got something else I can rely on. TradingView is that something else for me, Stu. It's a broker agnostic, amazing web-based platform. It has a robust phone app. It does everything but put your trades in. So what you can do is, and I don't know that Fidelity has an API they've opened for, I'll have to check. But do you know if Fidelity is one of the brokerages that you can, even if they don't, it's okay, Stu. What I would say is during the trial, what I'll do, hey, bot, can we talk about how to sign up for a trial of TradingView when we start the trial on the, you'll add it to the, so I don't think Fidelity is part of it, Stu, but here's the thing. Bot has some extra tech sessions that we have planned for this trial package window, right? So what we're gonna do is have a little breakout session where we can show folks how to sign up for TradingView. So that way, and this will be next Thursday, right? So one of the things that, and by the way, you'll have a tech session Monday. You'll have a tech session Thursday, and every single Monday during the trial, there will be a tech session, right? Which is one of the sticking points for a lot of the traders when they're learning how to trade. So we'll show you all how to sign up for TradingView, and you can try a trial of TradingView while you're doing a trial. So we'll show you how to set that up. So while you're with us for the month, we'll show you how to use TradingView. And yes, my indicators are available on TradingView. That way you're with a platform that isn't attached to a brokerage. That way you can trade with whoever you like, but you have really great charts to make your decisions from. All right, gang, I've run over. So my Sector Secrets Mastery folks, I will see you in just a moment. Everyone else, if you haven't already registered, I'll see you on Wednesday, simpletrading.com/opportunity. Okay. All right, gang, be good to each other. I'll see you tomorrow. Same time, same station.